YouTube, what's up, beautiful people? Welcome to episode 2 of J Talks Crypto. If you guys haven't subscribed yet, make sure you hit that subscribe button and the bell notification. It helps out my channel. All the information that I'm going to give you guys on my channel is going to be free info. So at least help a brother out. You know what I mean? Show a little support. I appreciate it. But I wanted to make episode 2 before we actually go buy our cryptocurrency. This is some stuff that we really need to talk about. It's risk management. It's the most important thing about investing is making sure that we're covering our ass, making sure that we're not going to lose our whole entire principal, what we initially invested in. Our goal is to make money, not to lose money. So these are just going to be things that I learned from doing investing that is going to help you guys too, as far as, deciding what you want to do with your money, okay? And I think the first thing that we need to talk about is the money that we're going to put in, okay? So the money that we're going to put into cryptocurrency or whatever you're going to put it in, if you're going to put in stocks or whatever you want to put it in, first and foremost, this needs to be money that you can afford to lose, okay? So we're not putting our whole paycheck, we're not going to put, grandma's savings, you know what I mean? We're not going to dip into our 401ks in order to put some money into crypto or, stuff like that. Because ultimately, yeah, we're in a bull cycle right now, but later on in the year, we're expecting a really big correction, maybe 60 to 80% correction. Same thing with stocks, real estate also. It's, a lot of these things are very inflated. That's what happens when you print out a bunch of money. You get a big inflated market, which of course does not last forever. But right now, the good news is there's plenty of time for us to make a lot of money. But we only want to invest money that we can afford to lose. So if that means, taking out maybe 10 to 20% of your paycheck and putting it aside, or, for some of you guys that wake up every day and get a $5 cup of coffee from Starbucks, maybe only do that once a week. You'd save yourself a lot of money at the end of the month. Or, if maybe not buy a new outfit for every day of the week. Some of you guys are going shopping way too much and you're getting a paycheck and then it's gone. You don't have enough money at the end of the month, and just don't live like that, guys. I know it's really nice to be able to impress people and stuff like that, but it's better to be able to invest your money and have money, and later on you'll impress all those people. It doesn't even matter. Like, one thing that I learned from making more money now, it's like I really don't care what people think, and that's another reason why I got on YouTube, because I really don't care. These people are here today, gone tomorrow, and then they'll be right back when you get some money. So it doesn't matter. So yeah, first and foremost, we're only investing money that we can afford to lose. That's very important. Secondly, the second thing that's very important is that we need to be doing research, guys, all the time. The big part about doing investing is doing our research. Don't just take what I say. Again, LJ's your friend. He's not your financial advisor. You guys should be doing your own research on these projects. I will tell you guys about projects. We'll talk about graphs on here. We're going to talk about, how I'm reading these patterns and stuff like that. But at the end of the day, you guys should be doing more research than just watching my crypto channel. And, try to find credible people. Try to find people with a track record. Don't just, there's a lot of people popping up all over YouTube that really don't have any background in this. They don't know what they're talking about. I would try to find, maybe a group of people that I really trust what they're talking about. They're linking news articles. They're talking statistics. They're doing deep analysis as far as who's involved in the project and stuff like that. They're just not, blowing things up out of their butt. Sorry, my clock's telling me what time it is. But yeah, so we want to make sure that we're trusting and trusted people, not just people that are just trying to shill a project that they're in so that they can make money, because there's a lot of those people too. The third thing that we want to do is, when we do find these good projects that we want to get involved in, is that we don't just throw all of our money at one project or two projects. We want to have a diverse portfolio. You always diversify, guys. And I know it's going to be hard when you see one of your things outperforming some of your other stuff, but just know that even if something runs up a lot, it's going to retrace. It's going to have a pullback. People watched Bitcoin run all the way up to 40K after I said after we get to 11, we're going to have a huge run up. And then I said we were going to have a pullback, because it's healthy. It's healthy for a market to correct. So just because one of your things is taking off that you're looking at, doesn't mean you should go chase it. We don't chase profit, and we don't buy into FOMO. FOMO is fear of missing out. So we don't buy FOMO, the Wall Street bet stuff. We don't invest in that. We don't invest in the GameStop. We're not looking at Dogecoin. We want to have a nice, strong, diverse portfolio with things that we believe that have a future in the future. So another thing that we don't buy also is highs. We never buy highs, guys. If the market's already at an all-time high of whatever you're looking at, it's not a good time to buy in. That, again, ties into FOMO, fear of missing out. You feel like this is running up and you need to jump on the bandwagon and be a part of this. No, if you feel like that's a great project and it is already running off, wait for a pullback, guys. Wait for, and not just any kind of pullback too. We're going to talk about the patterns and when you should time your position, because that's a big thing also. If it's just really showing like it's just breaking through every level of resistance, that's probably not a good time to get in. We want to get in when we're kind of like riding a good resistance line, but when we're showing good bull patterns, which we're going to talk about patterns again. Again, guys, most of this stuff, it's not hard. It's just learning patterns. It's a couple patterns that you need to know that can make you a lot of money. So again, hit that subscribe button because we're going to talk about that. But yeah, we're not buying into FOMO. We don't care about the fear of missing out. We're looking to buy the fear, guys. Look for those red days. Those days that are red, I love those days because then I can go shopping. I don't want to go shopping when something's up 20, 30%. People asking me if I'm going to get in Dogecoin when it's up 800%. No, I'm not going to get in Dogecoin. And I said that, and then look what happened. It dumped. Everybody knows. People that have been in stocks, people that have been in these type of markets, they understand that these things don't go up forever. It's not going to be a straight line. None of your stocks are going to look like this, guys. So that brings me into our next thing that we're not going to do is we're not going to panic sell, guys. The trend is our friend. We are going to have pullbacks in this game. You're going to have days where you're up. You're going to have days when you're down. I'm not up all the time. One thing that I learned early, I was invested in Chainlink. I did a lot of research on the project. I was like, dude, Chainlink is going to be so good. I was all hyped up on Chainlink, and I still am hyped up on Chainlink. I love Chainlink. I think it has a lot of longevity. It's going to go to $1,000 personally if you ask me. Again, not a financial advisor, but I expect big things out of Chainlink, and do your research on that. Again, we're not going to get too much into Chainlink and why I think that, but I do think Chainlink's going to be a long-term investment. And I got in really early, guys. I got in at $16, which is awesome because now it's trading at like almost $30. But I was watching Chainlink for a long time too. And I got in at 16 and then it dropped down to like maybe like 13 or like 11 or something like that. And I noticed like my balance in there just went way down, and I freaked out because I was over leveraged. Again, I was investing money that I couldn't really afford to lose. And I just had really good feeling about this project that I was just getting in on. And I was, not new to the market because I've been doing crypto for a long time, but I just got greedy, and it's very easy to get greedy. I mean, I even sometimes buy into FOMO, and then I realize I'm like, dude, why did I do that? Like, I bit myself in the butt. Like, I've sold out of positions before to get into things that are, have a lot of upside, and then I watch those things that I just sold out of go up. That's the worst feeling, honestly. Like, it's just better to have a diverse portfolio and to make honest gains instead of having, a couple things that run up and then run down really fast. It's not a good feeling. And then you have to be stuck in the deal, and you see all these other plays that you could be making on the side, and some new stuff too. So, make sure when you diversify also that you have some larger cap things. Buy some Bitcoin, buy some Ethereum. But also have like some lower cap projects so that if they do, those are the projects that have the better chance of like 100xing, 200xing. Bitcoin and Ethereum, they're not generally going to go up 100% in a day. There are smaller cap projects that will go up 100% in a day, but just know that those smaller projects, they have a smaller market cap, so they can also go really down a lot in a day. Like, they can go down like 50, 60% in a day. So again, we're spending money that we can afford to lose. Maybe that might be something you want to throw like $100 at, not $500 at. Or if you can afford to throw $500, throw $500 on one of those things because it could go up. But your financial situation's up to you, and you got to be honest about that. I wouldn't take a lot of those small cap bets. I wouldn't just diversify into small cap projects because it's very risky. All those things are very risky. No matter how good the team is, no matter how good the development team is, I would not throw a large portion of my portfolio into a small project. It's just not a good idea, especially if you want to be in this for the long run and if you want your portfolio to grow. It's important to have some safe stuff. Like I said, Bitcoin's a safe bet right now. Again, not a financial consultant. I think Bitcoin, we could see a six-figure Bitcoin, and this market kind of depends on Bitcoin to be successful. So have some Bitcoin in your portfolio. It's a great way to keep your portfolio looking green. Also, Ethereum too is a great way to keep your portfolio looking green. And then there's smaller cap projects that you guys, we're not going to get into the small caps, but just have a couple different things. Have maybe like 2 big ones. Have like maybe 3 medium ones that are around like maybe between $10 to $25. And then maybe get into some smaller cap coins that are, between under a penny and maybe like, I don't know, like 15, 20 cents, that, you know, you really think it blow up. Or even look at those dollar ones, $2 ones that you think, you know, that people are giving good price analysis and stuff like that. Because you'll hear a lot of predictions, guys, on different prices and stuff. But again, we're going off of trusted people. We're not just going off of Joe Schmo off the internet. Don't just go off of LJ off the internet. You know, again, LJ's your friend. He's not your financial advisor. It's up to you to do your research. I do a lot of research. I watch the market all day. I watch these trends all day. And ultimately, you don't really have to watch these trends all day. That's just something that I do because, again, I want to be able to give you guys good content. I want to know what I'm talking about, as well as I like to be informed in this space because it's so fast developing, guys. There's so many new companies popping up. There's a lot of projects, again, these small cap projects that will, you know, 100x, 1000x your money. And so you do want to be in a part of a couple of those. But again, it's money that you're comfortable with losing because those projects can go south also. They might not have everything in place that they need to, you know, get to the next level. So just keep that in mind too. We're getting kind of long on this video, so I'm probably going to cut it here. Make sure you guys tune in for the next video. I think the next video we might be ready to actually start buying some stuff. So that's it for episode 2, guys. Again, make sure if you have not subscribed yet, hit me with that subscribe button, hit the bell notification. And if you have any questions or anything like that, or if you have any projects that you want me to review, that you did your research on, that you want to just be like, hey, LJ, is this a good project? Just let me know in the comments, and maybe that'll be a video that I make later on down the line after we help you guys get set up with your Coinbase. And we're going to get it started on some other exchanges too. But we're going to start with Coinbase, so maybe that'll be the next video. I think we got rid of all of the things that we need to know before we start investing. And yeah, we'll see you guys in the next video. Peace.